Deloitte recently came out with a report called Market Manipulation in Digital Assets. And I thought it would be a good idea to actually elaborate a little bit on this report, because one thing is that I constantly say we are seeing market manipulation. Another thing is when one of the big four, one of the biggest accounting firms in the world, come out with a report like this. And needless to say, wherever there's money to be made, we will always see some kind of manipulation. And currently, there's no other market that is so profitable as speculating with cryptocurrencies. No other financial market, however, is less regulated than the crypto market. Basically, there's no business like the crypto business. It is truly not an understatement to say that it is just like we had the initial gold rush back in the day that we experienced in the wild, wild west. And currently, the cryptocurrency industry is the good old wild, wild west. Now, if you know my channel, then you know that I've been very active in trying to uncover or show you that market manipulation is in fact taking place. We always have live streams if I'm here. But you see, the difference is that many other YouTube channels or journalists or platforms or the press or whatever, they will talk about the sudden outbreaks, either to the downside or the upside, but they will regard them as, oh, you know what? It was probably the retail investors, or, if they really want to, show that they are very brave, yeah, it was the institutions. But you see, from my point of view, that's not true. And I will give you a list of reasons in the end, but just quickly two. Retail makes less than 15% out of total AUM. Second of all, when we are seeing these sudden outbreaks, they mostly appear when the majority of the population are sleeping. And so I believe that this is neither institutions nor, the global amount of retail investors that amounts to 15%. I think it's more a group of entrepreneurs. It could be whales. It could be someone, that has set up a trading war room, like somebody like George Soros, who actually does have a huge amount of experience when it comes to manipulating markets, right? I mean, it was George Soros who manipulated the British pound. He was the ultimate warrior of the British pound. And that's, quite big. I would even say that being able to break down the British pound makes the cryptocurrency markets like mini-me. And why do I say mini-me? Well, the reason is that obviously the smaller or less volume spread out on a various amount of currencies, the easier it is to move the prices. Now, this can both be flash crash to the downside. It can, however, also be a flash pump. We want to state with this video is that market manipulation is taking its place in many shapes and form. But first, I want to welcome you to Crypto Never Sleeps. In case you're new to this channel and you want to stay on top of the crypto world, well then please hit like, smash subscribe so that you can be notified every time we upload new videos, so that you can protect your wealth, preserve your wealth, and ultimately also increase your wealth. My name is Nico Arachi and I'm the host of this little show. So this report from Deloitte is titled Market Manipulation in Digital Assets that I'm referring to. Now, the market capitalization for cryptocurrencies has hit a record at the time of 1.5 trillion in 2021. That's more than 1,500x increase from the US 1 billion in 2018. However, they believe that as much as 90% of its trading volume could be target of manipulation. You see, digital assets are, as we know, a new asset class, and DeFi has, however, promised to be the catalyst for change in the financial markets. But as we know, with innovation comes a renewed concern for investor protection that obviously needs to be addressed, but to what extent, we will also discuss. The digital assets, they include cryptocurrencies, obviously, stablecoins, also central bank digital currency, even though as of now we only have, I think, the sand dollar. Initial coin offerings, ICOs, security tokens offering STOs, but also digital assets, exchange-traded funds. Obviously, taking that into consideration, all under the assumption that it's being traded decentralized. So some of these assets, they are traded similarly to traditional securities and derivatives products, but they do differ in the operational features, which are important. So what is it exactly? How do they differentiate? Well, some of the fundamental differences, and if we look at the main three factors, such as ownership, custody, and exchange, they actually make the difference out. Because if you are aware of the crypto industry, you know that you can pretty much be anonymous. That means ownership is no one. Custody can be yourself, right? But your cold storage, you're basically your own custodian, you're your own bank. And the exchange can be Uniswap. It can be completely decentralized. So these are three components that really differentiate the traditional markets space currently. So what we also can see is that digital assets, they are traded on, let's say, private, public, centralized, decentralized exchanges, but they are globally accessible, meaning that we got 24/7 accessibility, which we also do not have with the traditional markets, right? You want to sell something on the New York Stock Exchange, well, Monday to Friday, whatever it is, 8:30 to 4. So that's when trading is going on. That's when everybody is active. So that's also why we are called Crypto Never Sleeps. It has advantages, but it certainly also has disadvantages. So with basically no regulation, this has created a large number of venues where digital assets are and can be traded. And this market, let's say, fragmentation impacts obviously the accessibility and the liquidity of the entire crypto market. So it makes it uniquely prone to investor abuse, market disruption, and ultimately also market manipulation. But what are some of the most relevant manipulative behaviors that we are observing in the digital asset market? Well, we know the pump and dump, right? I think we all know that. Spoofing, you may not know. Layering, probably also new, but then we got wash trading and, of course, cross-product manipulation. So behaviors like spoofing and layering, they are very hard to detect due to the decentralized nature of the digital asset marketplace. Now, cross-product manipulation is particularly magnified in cryptocurrencies, given the large number of exchanges at play and the challenges surveillance and supervisions teams have in order to look across multiple spot and future crypto markets. And basically, we all know we don't have true supervision. Well, the pump and dump schemes that we really have, I would say, we witnessed during periods of high liquidity, they are relevant given the bullish market sentiment around cryptocurrency. And I think this is what we really have seen both in 2016, 17, and certainly also in 2021, right? Pump and dump, Wall Street bets, and Elon Musk, Doge, and all those sentiment shitcoins. Now, wash trading is also applicable in the crypto markets, and it's carried out through the creation of what they call ghost accounts or other deceptive means which inflate volume. So basically, that is what from my point of view, is what XRP are doing, setting up a huge amount of accounts and transfer some money there, here, there, and then they inflate both volume but also the price by actually just owning the same account, keep increasing the price. So the concern around volume inflation is obviously not unknown to the capital markets and the traditional markets. However, it is significantly greater in the crypto markets. That refers actually to market cap. So I myself would think or say or advise that I don't think that the market cap that we are seeing on all coins, that would actually come into actually be able to execute it if everyone were to sell at the same time. And not even everyone. Perhaps even 10% of sales would be able to drastically impact the price. And that is also what we are seeing when we are seeing these flash crashes or flash pump. However, the rapid growth and the dynamic market sentiment around these assets is providing greater incentive to inflate volume through these manipulative schemes. And its effect is multiplied given the large number of coins, right? We got more than, 9,000 coins. So, you can really inflate one coin and crisscross. I mean, it is truly the wild, wild. However, furthermore, we are seeing organizations that have started raising capitals through ICOs, which have witnessed witnessed multiple instances of manipulation, such as false or misleading signals and other forms of price manipulation. Newly created financial products create new opportunities for manipulation. Since these markets are still developing, the industry and the regulatory regime, they're continuing to focus on maintaining a balance between promoting market growth and protecting market integrity and investor interests. Now, I just want to say, this is where we can see, like, for example, Uniswap is not a bad place, but on Uniswap, you can basically list any kind of token. Now, it's up to you and me to understand if we want to invest or not. Then we got more regulated spaces, some of the regulated exchanges, for example, Kraken. You see, that's a good example of how you can actually have some trust in a centralized exchange that they won't list, a scam coin. I myself believe that is a good way of going forward. I think it is wrong that if we look at a country like the United States, any country, that they would say we're going to regulate all markets. Have a regulated market. Have the US stock exchange and say there, everything is regulated. There's no front running. There's no crisscrossing. There's no shilling. There's no nothing. However, why not if you want to have an open market where you can do whatever you want? It's basically a little bit like UFC, right? No rules, and boxing or, kickboxing. Let there be a market for everything. And ultimately, demand and supply will set the tone for where people want to buy and sell and do. But needless to say, of course, the fast pace is the nature of digital assets. And combining that with the revolution of technology, it obviously makes it harder for regulatory regimes and exchanges to keep up with the evolving disruptive schemes and manipulative behaviors, Deloitte is still stating. So if you consider the nature of digital asset markets, it is obviously true that institutional players know this opportunity. Some will refrain from investing, but some will also wrestle down. They will seek this opportunity because they're seeing a huge potential for manipulation. And therefore, they will try to manipulate the market as long as they can. And it will remain to be seen, are governments going to implement regulations, or are we going to still continue to see the wild, wild west? And by the way, what would you like to see? Would you like to see regulations, or would you like to see more like, let there be different exchanges with different regulations and rules? I guess the question is, how are digital assets surveilled and how do they differ versus traditional financial stock market and bonds? But we do know that the regulation for traditional markets is already in place, right? And it's very difficult to manipulate. And in case one would do, then they can, if they get discovered, the punishment can be severe and it can be imprisonment. However, currently the surveillance for digital assets hasn't even started yet. And the complexities inherent to the digital asset market structure makes it much more challenging. So you see, the reason being is that currently any market participant can hold multiple accounts across several venues. This allows obviously for manipulation schemes like spoofing or wash trading to be executed from different accounts across different venues. And since currently there is no real way to detect if the accounts are owned by the same individual, this is where I'm saying that's what I think that XRP is doing, right? It's the same individual, the same organization owning various different accounts with their various different brokers and traders, and they are the ones keeping the price up. So how do we plan ahead? Well, needless to say, one of the potential solutions that are currently being discussed in the marketplace and by governments is the establishment of a central governing body or multi-exchange working groups that can intermediate between digital asset venues and implement cross-border information sharing, such as structural change could also help to introduce further transparency in the digital asset marketplace through shared surveillance frameworks. What does that mean for the future? And it is really up for debate. Now, I personally do not think that government should intervene. Wherever governments are intervening, it usually turns into shit and not gold, right? They even turn gold into shit. But nevertheless, institutions, traditional institutions, and let's say in order to achieve mainstream adoption, we would need to see some kind of investor protection. We would need to see some kind of regulatory environment that we know that Grandma Betty and Sister Kristalina won't be cheated. However, in order for this to happen, as I always say, I think we still need 2 to 3 years before we're going to see a fully functional, operational, transparent cryptocurrency market where we know where to go in order to avoid market manipulation. Now, my last 2 cents on the dollar is I want to tell you just a little quick story. When I was little, my dad asked me what I wanted to be, and I said I wanted to be an investor. I wanted to be a stock trader. And my dad, he said, well, you want to go and gamble in the casino. You see, for him, it was pretty much the same, stock market, casino. I, however, after 20 years and being a quite successful investor, I have come to identify that they differentiate in 2 ways. When you go to the casino, you know that the main rule is the house must always win, and the house will always win. When you go to the stock market, I think it's a little different. The house, obviously being the banks, they will always win. They will always win, always take their cut of commission. But the stock market to me seems to be more of a platform where the smarter will ultimately outsmart the less smarter. And by understanding this sentiment is basically what has made me successful, is not really to a very detailed extent analyzing the technical aspect of it, but analyzing the sentiment, how people are greedy, how they don't want to be left behind, and how they are ultimately trying to cheat the rest. It's a wild, wild west. It's a wild, wild world. But nevertheless, I hope you enjoyed it. It was the Deloitte report with a touch of my own interpretation. And in case it did give you any kind of value, well then please hit like, smash, subscribe, and please come and join us for our daily live streams. Stay blessed, stay safe, stay home, take care. Don't think too much because it could cause manipulation.